Hey there everyone, welcome. This is my stock market technical analysis channel. If you're new, follow along, you might learn something. And if you know something that I don't, leave it in the comment below. We can all learn from each other. We're going to get into it. Someone asked me to do an end of the day video, and I figured, you know what, the markets are so crazy right now, why not? So let's get right into the charts. And again, if you want to learn some technical analysis skills, take my course. 99 bucks, helps me out, helps you out. It's mutually advantageous. So let's go ahead and start out with the Nasdaq futures. All right, so here's what we got going on. I can now make this trend line right here on the Nasdaq futures NQ. So we're gonna watch that. Looking for a break of that. You can see the futures today, they bounced it, they ripped it higher pretty much all day, except at the end of the day, they faded it back down. So again, looks like we just had a kickback rally and a failure. But again, on the futures, we'll watch for a break of that trend line. Another thing is we've got some support. This is a trend line I've had drawn out for a while. And if I extend it, you can see there it is right there at about 12,944. We got some support. So we hit that support, bounced off that support. That makes sense. Now if we come back down to it, we're looking for that breakdown. Moving on to, let's look at the Qs, the tech sector. So this is the one that this hasn't broke yet. We're looking for a breakdown here. The after hours looks like they're trading it down near the support line, but they haven't broke down yet. So I've got this bearish rising wedge here on this hourly chart. It shows up on the daily as well. And just to zoom in, looking at a break of that lower trend line. Again, if you guys can't mimic my charts, if you're new, I use log scaling. So use log scaling on TradingView. This is the one I use. Go down to here, hit that log button, toggle log scale. All right, it's a more accurate way for charting versus how do they say it? Arithmetic scaling or linear scaling. So again, that is what I do. And you got the support line on the Qs. Right now, it's sitting at about 319. So we're looking for preferably a gap down. But, and if we gap down tomorrow and break that 319, I think it's on basically to the downside. This is really what's holding the market up. And so the SPY, and we'll show that here in a second, but the Qs rallied today pretty much on the back, from what I could tell, of the FANGs for the most part, but then they sold off into the close. The SPY here, so we broke down in the SPY. We had the sell signal. Let me just roll out, look at the daily here. Just the big picture, when I look at this chart, I always look at the big picture. Okay, what's the big thesis that I'm trading on? Okay, one thing that I'm trading off of is the weekly chart going from the 2009 lows where we rolled up, and I show this almost every video, so I know you get tired of it, but there's new people coming on. Okay, so here's your lows, the 2009 lows on the weekly chart, hit support here in 2016. We hit support again there, hit support then there, hit support all through here. Broke in 2018. Remember the repo market garbage that was going on? If you don't, look it up, but we had that big drop and the repo market was having problems. We broke the bullish trend during that time. That's when I created the channel, and that's when I basically turned bearish. And then the Fed basically reversed course with their policy, and we got multiple expansion Fed pump 2019. Into 2020, hit that resistance line from below. See the blue line? We went right up to it, hit it, and then all of a sudden the market cared about the COVID problem, which was known to the market. They just didn't care. But once we got up here and we were struggling with resistance, then the market cared. So it was technically based. We also had negative divergence right there. See that negative divergence? This was a divergent high. All right, boom, big drop. Then the Fed came back out, did more nuclear pumping, money pumping, and we got more multiple expansion Fed pump reaction 2020. So again, since we broke the bullish trend, both up years have been Fed induced. This is Fed induced, this is Fed induced. All right, so keep that in mind. The Fed comes in when you get drops. and then they pump the market. You get a drop, the Fed comes in and pumps the market. So what are we heading for now? Maybe we get a drop. What's the Fed going to do? That's the $1 million question we're going to have to figure out. And, I continue to look at gold miners for that reason. But, so there's the thesis, right? We're trading right up against resistance. See where we're at? And while we're doing it, we've got negative divergence right there. And we all, well, yeah, there's the negative divergence. It's just a big extended negative divergence. And if you look at the daily, because the weekly is really obtuse, it's hard to trade on it. It's just something to keep in mind, understand the big picture. Now we look at the daily, and there's your negative divergence. You've really got it there, showing up clean and clear. Has not been negated. So we got it on the PPO and the RSI, indicating that momentum is drying up. All right? Momentum to the upside is drying up. That's what these indicators are showing us. It's showing that we're starting to see a turn in momentum. So once you see that turn, then you look for a turn in price. And that's what we got just yesterday. There's your turn in price. Here's your uptrend line coming off the March 2020 lows, walking up on the daily chart. You got a tag right there, and you got a tag right there. You got a reaction there. It was a bearish rising wedge, so bearish pattern. See how we wedged up and break to the downside. So there's your sell. That's a sell signal. That's as clean and clear as it gets on the SPY. We don't have it on the Qs though, and the tech sector. So that's why I think we haven't continued to drop. If we get it in the Qs, we start seeing that sell signal show up in the Qs. Look out below. Nothing's holding this market up. We're going down. And that's what I think is going to happen. So I think what's likely is the SPY is going to chop sideways while we wait for the Qs to break. Then the Qs will break and the SPY will resume to the downside. That's what I think is going to happen. Where are we going? Well, we've got some support right here. Let me get rid of this one. We got some support right about here. So 362.77. We got some support right in here about 350, 351. And, probably the bottom of that range down here at 321. We'll just kind of keep an eye on those levels. I mean, obviously that's a long ways away. 321, we get that drop from here. That's a drop of about 15%. Yeah, that's we could hit that. So that's the SPY. Oh, and one thing, let's go to the hourly now. So we looked at the weekly, we looked at the daily. Now we're looking at the hourly. And look what happened today. This is how you read the charts. What does this tell me when I see this? Well, I see a sell signal from yesterday. Everything was all clear, for the most part. Besides the tech stocks not breaking down, that's the only thing. You want to see those tech, those you want to see like Apple and Amazon and what's the other one? Microsoft. You want to see those three start to break down or show at least bearish signs. And when they do, the market just can't stay up. So something to know. But anyways, the SPY did have a sell signal today. Gap it up and rip it straight up to resistance. And you can see these two wicks where we overshot resistance just briefly. On the 1 minute I was watching it, it was kind of popping it, just trying to make you think it was going to recover and go higher, but was struggling. And then, but sure enough, on the hourly, hourly closes below resistance. No hourly closes above resistance. So again, we get an hourly close above resistance, preferably 1 or 2 hours. Then we probably recovered that support line and, this was a bear trap. But we didn't get that, and we turned down and pretty much started to reject and head down. So after hours, looks like we're gapping, coming down a little bit more, down to 376.40. Not a lot, but coming down a little bit more. So we'll watch the futures. We'll see what happens. But again, rejected at resistance. To me, looks like we're, probably going to consolidate sideways, head down towards the bottom of this range eventually, and then break when the Qs and tech sector breaks. Okay, IWM, small caps didn't have really much of that rally, but you can see here, let's go to the daily. Okay, so there's a sell signal yesterday, not super impulsive, but you did get a good close down below it towards the lower end, and then today, just more selling and closed down kind of where it closed at yesterday, a little bit lower though. So we got a lower close. That's a sell signal as well. And the other thing, you want to look for, what are the institutions doing? Are they buying protection? A lot of the time, I think what happens, I don't know for sure, but this is I'm just speculating, but when you get a sell signal, like what we saw yesterday, it catches the institutions off guard. They're not positioned for it. So they need a little bit of time to get positioned for the drop. So what they do is rally the market higher, bidding it higher. They buy and bid it up in order to get people to, for shorts to cover, and then they can take those short positions. This is a perfect move for an institution to take a short trade who wasn't short up here. You don't want to take a short all the way down here and get a bad price. You want to rally it up and get that liquidity where the short traders who took this sell signal are covering their shorts because they get scared out of their short positions. They're covering, closing their shorts, and then the institutions can grab those positions. It creates liquidity. Institutions need liquidity. They need volume in order to make to position correctly. Because if they don't have that volume and they trade into a thin market, it moves the market in the wrong direction, and they can't make any money. So that is possibly what happened. But look at the bonds here at TLT. Sold down, but towards the end of the day, they bid it back up a little bit. So nothing crazy, but something to watch. The bonds, closed about down 0.5%. Not a complete reversal or anything, but volatility is the other thing that I'm watching. Look at that UVXY. All right, yesterday we had a clear breakout of the VIX. I was talking about it for, I don't know how long I've been talking about this one. And obviously it still hasn't completely played out, but by the time it plays out, the trade's going to be gone. So I got to talk about it before the trade plays out. And yeah, we started to get bullish divergence. So I really started to talk about it since December. So about 6 weeks I've been really pointing this out as a potential long trade, looking for a volatility spike. And we had bullish divergence here. It was just completely it was speaking to me in the charts. And so I was building a position in this over that last 6 weeks. I was telling everyone that. And yesterday obviously was a great day because it was up 30-something% in one day. And today, a little bit of a pullback, but we still closed, look where we closed, all the way up here, way cleanly above this resistance line and looking good. So looking at the hourly here, we broke above yesterday, came back in for a back test. They undercut that support just a little bit. And this isn't the cleanest support line, okay? Like these leveraged ETFs, the trend lines aren't always the cleanest, but again, it's in that area, held support pretty much all day, and then at the end of the day, started to run higher. So again, looks good to me. Looks like this is gonna go higher. Where's it going? Well, because there's so many long positions and the put to call ratio is so low. Here, I'll just pull it up real quick on this this chart here. You can see the put to call ratio. We recently just hit 0.34, which I believe is an all-time low in the put to call ratio. What that means is the market is not buying any puts and all calls, put to call ratio. So there's no protection in the market. That's the point. And volatility, UVXY, tracks the amount of puts basically that are being bought. And this is a leveraged one, so not trading advice on this one. But there's no protection in the market. That's the point. So if we get more downside, you're going to see a mad scramble to buy put protection, and you might even see it. You might even see it now already with kind of everything that's going on. I mean, we are obviously seeing it. That's why this is up 30%. But I think this thing could easily get up to, looking at this chart, I think we could get up to, probably at 29 at least, potentially higher, maybe up to 46. Are we going to get all the way up to, the COVID drop lows? I wouldn't bet on that personally. I'll be looking to take profit, probably starting here at this 23 area, probably take some profit at 29. And then, maybe hold out a small amount for this one up here, or in case, and it could become a runner, so you never know. All right, so that is volatility. We saw this weird spike in gold today, and I was looking at it. It was kind of strange. So gold spiked up, and I noticed that silver was on a tear a little bit. It was up 5% today, and there really was no reason for silver to randomly be up 5%. It wasn't priced in the charts. I didn't see any bullish divergence or anything telling me that silver was about to break trend or technically based. But I did find out that the Wall Street Bets forum had some prominent person in there, I don't know who he is, but posted something about trying to do a silver short squeeze. And I think that was interesting because I think that's where that silver pop came from. So, you know, when I saw that, I decided to take a small position in this PAAS. And, you know, just in case you get some sort of a runner or a squeeze, you know, I want to have a little bit of action in that. So I grabbed some of this PAAS. It's very speculative. It's not technically based. It's not based on the charts. So something to keep in mind. Now, yes, if you look at the hourly, this one does have bullish divergence here on the hourly. There it is right there. This was a divergent low just yesterday. So on the hourly, you've got it. The daily, yeah, it's not the cleanest on the daily. So we'll have to see. It's not the best bullish divergence. So we'll watch this. I mean, we could run up and get some sort of pop and then sell off. We'll just watch, but I think there might be some more upside. You see in the after hours it's up to 2.25 or 2.5%. So there might be a little bit of a runner on this one. But again, this one's just, you know, I like the stock. I like silver and gold miners for specific reasons. But at this price allocation, this price point, I don't see anything in the charts that tells me that this is the spot you want to buy it at. But it's not bad. It's not a bad spot to buy it at. XLK, another way to look at tech, just take out Amazon. Here's your March 2020 lows. You got a reaction there and then several reactions right here. So we're closed right at support. We're watching for a breakdown here. Again, tech hasn't broken down yet. So we see this tech breakdown and I think we're in for a doozy on the downside. But if tech doesn't break down, we could still have that false breakdown. That's always a possibility, especially when tech hasn't broken down. Let's look at Apple here. Apple, all right, so that's pretty bearish when I see this chart. I haven't actually seen this till right now, but I did know that it was selling off. All right, so Apple, March 2020 lows. We're looking at an hourly chart here, but this is going back to March. You can see we held support, really started to just trend up. Broke trend right here, but that was a bear trap for sure. And you know, you gapped up. Usually you get those gaps. That's the trap. You know, the move that you're not able to get out of your position in. So you gap up and they ran it real high. And then you come in, we've tagged, you know, we're starting to break down. So you can see we haven't broken that trend yet, but we hadn't yesterday. So even though the market was selling off, tech hadn't broke, Apple closed down here below that trend line. Now it's close enough. You could call it, you know, it's kind of too close to call. But again, we're below the trend line. And I think it's likely that we could see lower prices. So watch for that. You know, Apple starts to break, the market and tech's going to start to break. Let's look at Microsoft. Yeah, so this is one of the reasons why the market was rallying today is because out of the blue, randomly, everybody wants to buy Microsoft. I don't know. Microsoft right now has a breakout and to the upside, and it has not failed. So this is your sideways price chart or price action. Broke to the upside. This looks like a back test right here, the sell-off, and then today closing higher. So that's a breakout until it's not. It's a breakout. Now, looking at the daily, we do have negative divergence on the RSI and on the PPO. We're just extending it, basically. So this is a new high. I wouldn't say it's marginal, but this is a new high, but it's a divergent high. So what you want to look for, if this is going to prove to be a false breakout, we should start to see prices turn back down. And we'll see the RSI start to turn back down and the PPO start to turn back down. And then at that point, you look for the break of this right here, about 227.75. You get the close below there, you know, especially a daily close below there, false breakout. That's going to be pretty bearish if that happens. Amazon still chopping sideways. Really nothing's different here. We're just in this kind of topping pattern. Until we see a breakout, that's how we're going to play that one. In Google, so again, bearish rising wedge. It continues to just wedge higher within that wedge. But negative divergence, it's cleanly intact, and it's not going away. So the this tells me we're going to break this trend to the downside. So you can look at this trend line here. You watch for a break of that. When these all start breaking, the market's going to break. It's just something to pay attention to. Look at these ag commodities like wheat. Like, look what's going on with wheat today. So this was your trend line right here. This is your sell signal. It broke, did a back test, and then it's starting to roll over. So again, not so much. I'm not really interested in trading wheat right now. I've got some other things to look at. But the point that I want to make is all these corn, wheat, corn's not down too much. Coffee. Some of these ag commodities are down. What's soybeans? Let's look at that one. That's a good one. SOYB. Soybeans is down today. All these ag commodities are down after breaking trend. This one broke. Soybeans broke trend right somewhere right in here. You had a sell signal right there. Broke trend, kickback rally, starting to turn down. This is the reflation trade, right? So energy, commodities. It's all about reflation. Things are going to come back. There might be some inflation. That's all this trade, and it's not playing out. So that just keep in mind that this reflation trade is possibly gonna change, and the narrative will change, and all the headlines will change, and you'll hear about everything getting worse. You'll hear, oh, the economy's getting worse and everything's horrible. You'll start to hear that the more you go down. They're not going to talk about it now when the market's going up. They're going to talk about all the good, sunshine and rainbows and bunnies and everything's great. And then when the market goes down, they'll talk about how things are horrible. So the headlines aren't going to help you. They're going to tell you how horrible things are after they're horrible, and how great things are after they're great. So, okay, the dollar. This is the wrecking ball dollar, and we're watching for a break higher in the dollar. There's a lot of dollar shorts. You get the break higher, you're going to start to see a squeeze. And the dollar's going to rise. It's going to continue to put more and more pressure on the market. So if the market's going to correct or plunge or whatever, if it's going to be bad, then the dollar should break higher. All right. So watch for that. Today, they kind of popped it up and then sold it back within the range. So in this sideways range, basically, we are starting to make higher lows. You can see the low end of the range went a little higher here. Next low, they stepped in a little bit early, a little higher, and then today stepped in right about there, higher. So we're kind of trending up. We just haven't broken the upper end of this trend, which I think is somewhere right around here. We could move this line up a little bit, give it the benefit of the doubt, but now I'll just leave it for right now. Anyways, just watch that. And, real quick, daily chart on the dollar, bullish falling wedge there, bullish divergence, bullish breakout of trend line resistance, and we're just kind of consolidating. So everything in this chart that I see is telling me higher in the dollar. Okay, Tesla, watch out for this one. This could be a wild ride to the downside. The momentum, it broke. We broke trend. Here's your daily chart right there. And we did get the sell signal. But, when you first see that sell signal, there's a lot of non-believers, especially in this stock. There's all kinds of cult following people that they're just religious about this thing. And that's fine. People believe in it. They like the company or whatever. That's no problem. No problem here with that. But, from my perspective, technically, I think it's ready to rock and roll to the downside. Negative divergence here on the daily chart. It's just extended for a while. So the reality is this is all negative divergence price action, which is pretty crazy. And there was a split in here as well. So there's a lot of money that could come out of this thing if the momentum really starts to shift. And we're starting to see the first signs of that when we get the break of trend, just like there. So looking for more downside, whether we go up first and hit maybe resistance or fill this gap, maybe it's completely possible. But I think that there's still going to be more selling. So just keep watching that one. Qualcomm, you know, very similar to what Apple looks like. But Qualcomm, I mean, there's no way to make this bullish at right now. I mean, you can see, here's your March lows. This price channel has been very, very organized and structured. So there is a lot of reactions along the support line and a lot on the resistance line. Just a clean upward price channel. No denying that. I did take a, you know, we took a shot at a short position in this price channel. It did work out. It was profitable. But, you know, it was a pretty quick trade. And here's where we're at today. That's a breakdown, a kickback rally, which didn't fully backtest. So obviously, there at some point in time we could run up and do a full backtest, completely possible. But had a breakdown, kickback rally, sold off into the close. So very weak close, and the close is important. So we're gonna have to watch this. I can see the after hours; they've got it up about up to 160. So I don't know. Maybe we're gonna open higher and do that backtest. Who knows where it'll actually go? But the thing is, weak close, and we're going to have to just keep watching this because it has broken trend. So I think we're going lower. Nike, I pointed this one out, and, you know, this has been a good short so far. You know, from really the high, the kickback rally to the low, about a 10%, you know, 9.5. And I think it's got some more to go. So you can see we hit support down here, kick back to resistance right about 136.30, and turned down. So we closed the day with a, you know, pointed down. So support is still obviously about 131, somewhere right in there. You know, we head back down there. We could chop around sideways for a little while, but again, looking for a break of 131. We break 131, and we've got 126.30 and 117.56. Okay, guys, that's all I got. That's kind of the read on the markets and a couple individual stocks. If you guys have any ideas or trade ideas or setups that you want me to take a look at, put it in the comments below. I try to get to the ones that look interesting, and I will try to respond on those or put them in a video. And we'll just watch the futures. Good luck, and we'll catch you guys on the next video.